G'day and welcome to the latest episode. And today we're joined by IkeGPS's Managing Director and CEO Glenn Milnes. Worked with Glenn for 6 or 7 years, I think. It's been on a strong performer in terms of the ASX. I think last it was trading about $1.08, up strongly over the last year. But it's a company that's revolutionising pole and overhead asset management for utilities, telecoms and engineering firms. It's experiencing massive tailwinds, which Glenn talks about in terms of the grid hardening within the US, which is 100 times bigger than Australia's rewiring the nation, as well as the fibre optic rollout, and essentially what initiatives they're rolling out in terms of AI, both in the business and out in the products. But we hope you enjoy. Glenn, thanks so much for joining me. I think we've worked with Ike for 5 or 6 years. You've been listed on the NZX since 2014, ASX since 2016, which is quite scary. Sort of overnight success. But maybe if you just, for a start, give us the founding story when you started to get involved with Ike. We can go from there.
Great. Thanks, Simon, for having us.
Pleasure.
We listed as a pre-revenue company. It was a hardware business at that point. My background's in the telco industry in Europe, and knew some of the challenges in building networks, overhead networks, and went about changing the business to a software company solving very specific workflows to get networks, power networks and telco networks built faster and better using technology.
And in terms of the core offering, it's pole and overhead, sort of software solutions. What's the sort of key problem that you're aiming to solve for customers at this stage? What do they use it for?
We call ourselves the Pole OS companies. So we're looking at how utilities can digitise their network, assess it, and then design a stronger and better and higher capacity network, and then also how they can maintain that network over time. And so whole of life cycle distribution network management is our goal. And
you're based in Denver, Colorado, which is a bit of a distance from New Zealand. Talk to us why are you sort of focusing on the North American market, and how is the sort of evolution from New Zealand to US sort of happen?
Yeah, the technology spun out of New Zealand, but from day one we've sold only into the North American market. We do have a handful of Australian utility customers, but otherwise, we're headquartered in Colorado and we've got an office in Alabama, and our team is just fully focused on the US market, and for good reason. There's 3,000 electric utilities in the US, all with the same problem of aging infrastructure and needing more capacity in a harder grid. And so the opportunity is just vast compared to any other market in the world.
And that dovetails nicely in terms of the grid hardening and the tailwind associated with Ike. Maybe just for those that aren't, obviously we've heard a lot and seen a lot of success on the ASX in terms of the grid hardening, and expansion with stocks interconnected there. Maybe just sort of to give us a bit of the lay of the land as to how bad the issue is, and why it is such a significant tailwind for Ike.
Look, I think Australian investors and shareholders are familiar with rewiring the nation and what's happening with the grid in Australia. In the US, the market is 100 times larger and the problem's quite a lot bigger as well. So very much aging infrastructure, more than 200 million distribution assets, 130 million of these. I know these numbers seem a bit arbitrary, but 130 million assets coming up to 50 years of age.
And so when you say assets, that's power poles?
They're overhead power poles. Okay. So we help customers get power from a transmission network into homes and businesses. So we do all the residential, all the business power delivery.
It seems like a crazy number in terms of power poles. And when you talk about the issues associated with that, and I've seen the fires and these sort of different things, obviously that sweeping through. What is that? How does Ike have a role in that in terms of either pre or post? With wildfires and power poles, sparking and that sort of thing. A bit of a case study there. How does that sort of look?
Yeah, look, one of our products is called Ike Pole Foreman, and it's the design software. So when a utility wants to harden their network and harden their distribution power poles, they're using our software to design that network. And today that software is getting standardized, or it has been standardized by 8 of the 10 largest utilities in the US and 170 other customers. So it's become very much an industry standard for grid hardening, and that also flows through to grid capacity. So they, in the US, they've got to double the amount of power on the grid over the next 20 years. It's a massive engineering task. The US grid's the biggest human engineered thing on the planet, and it's all interconnected. So it's a really big problem, and it's an exciting thing to be supporting.
And when you talk about fibre as well, is that an extension of the grid hardening, or is that further tailwinds? How does that sort of look in terms of broadband rollout there?
Good question. There's a fibre boom in the US, probably to run for the next 4 to 5 years. A lot of that fibre gets attached to the power networks, and often in the United States, you might have 5 or 6 or 7 other infrastructure companies attaching to the power network, and that all requires engineering and design and maintenance. And again, we sit behind 5 of the 10 biggest communications companies today. We're at a smaller scale in terms of how penetrated we are in those groups, but we help the fibre companies. They care about going fast and getting their network built. The power companies care about safe and reliable power, like the highest quality network design. So different, same products, but different value proposition.
And if we sort of zero in on the customers, I know you talk about 8 of the top 10 utility companies in the US are customers. What does a typical sort of customer profile look like, and who uses it within there? Is it the engineers? Is it end consumers? What does that sort of look like? And just give us a couple of examples of use cases.
Yeah, we tend to start with the standards group, and they lord over the distribution network. They set the standards for every piece of technology, every piece of hardware, every piece of kit that gets designed into their system. So they set the engineering standards, and they also want to make sure the utility's complying with regulatory standards, and for the reason they don't want to be, there's enormous liability risk if you do start the next fire or fail in a hurricane, etc. So we typically start there, and once we're standardized inside the standards department, then we go out into construction groups or joint use groups, and that's how we grow over time.
And in terms of the product suite, can you just run us through what their names are and what they're used for, and perhaps we'll zero in a little bit in terms of Pole Foreman, because that's been an incredible story in terms of acquisition to real scale.
We've got a software product that helps customers go out and collect and assess their network and digitise their assets, so they get digital forms. It's called Ike Office Pro. We've got another product that's used for the design and structural analysis of assets. That's called Ike Pole Foreman. And then we have an AI-centric tool called Ike Analyze, and that's where we've just released new capability where we put automation inside of these products. So we've got very expensive engineers using our software, and so if we can make them 20, 30, 40% more efficient and increase quality through AI capability, then that's very valuable.
And in terms of just zeroing back in on Pole Foreman, so you acquired that how many years ago?
About 4.5 years
years ago, and it was doing how much in terms of revenue or ARR?
It had about $500,000 of ARR at that time.
Almost zero at that time. Basically, and now we're sort of talking, upwards of 10 ARR, by the end of this year.
That's right. Yeah. So we've grown it probably 20 times in that.
And how much did you buy it for?
$3 million. So
it's been a good acquisition.
It's been a good acquisition. It's been they're a great team to work with, and we've really lent into, we rebuilt the software and turned it into a very beautiful, modern user experience.
It doesn't sound like it goes hand in hand with the industry.
No, we're trying to brand differently to most of the other players here. And, what we've managed to do, simplicity and clarity is one of our core values, and that means into products. So we put all of the really complex engineering, complex mathematics, complex physics behind the UI, the user experience, and just make the software very, very straightforward to use. And that's important because our customers have got hundreds and hundreds and hundreds of engineers using the software every day. So you want to make it easy to train and very standardized in terms of outputs.
You've built a bit of a war chest in terms of recent capital raisings. I think you had $34 million cash at bank recently. And you signalled that you'll use your customer council to build new products that have demand, which when it's customer led is always obviously a good thing in terms of uptake. What do they sort of look like? And if you could just expand on that a little bit more.
Yeah, look, we've worked very hard over the last 6 or 7 years to build a customer council. We've got 18 of the biggest utilities in North America that sit on that, and they're not mid-level people. They're the standards directors that run these businesses, and they've helped us design. They helped us design the next Ike Pole Foreman product.
Yep.
And they've all adopted it. And then I sat down with them at the beginning of this year, and took them out for dinner and said, what other problems do you have? And they've defined 2 additional big cost issues and big network quality issues, and said, can you build this for us? So that's what we're funding, and the idea is obviously to have
rinse and repeat.
Yeah, and have these products pulled through by the industry. It's very hard to push technology at utilities. They're quite reluctant to take tech that's being pushed at them. So the idea is product market fit.
And in terms of that, and I've seen a lot on LinkedIn, like you've got a new drive on this front. In terms of education and training and awareness around the different products and the capabilities, how do you sort of look at that, and what's the importance of that?
Yeah, we're a software business. We're not a training and education services company, but we use that to be able to get in front of our customers and help them. And we train on the National Electric Safety Code and how to be best practice, and we train on occupational health and safety for power workers who are dealing with volatile environments and dangerous environments. And the natural question that flows from those sessions, and we've trained many thousands of engineers now, the natural question is, how do we use technology, which leads into a constructive discussion around our software and our products.
And then if we shift to the financials, and obviously released the half-year update yesterday, which demonstrated, I think it was essentially record quarterly growth in terms of ERR or exit run rate, ads and whatnot. How you sort of looking at, if we step back 2 or 3 years, the business has changed fundamentally in terms of the growth. How are you sort of looking at it now? I sort of remember way back when this tailwind was coming and it was building, and again, it sort of feels like an overnight success, but I know a hell of a lot of work has gone in there. How do you sort of look at the next couple of years? Are we going to see these tailwinds really drive hard, or is it more into year 3, year 4? How does that sort of look?
Look, I think the universal view is there's a 20-year macro market tailwind for the electric utility industry in the US. There's $2 trillion of investment going into the grid. They're very, very large numbers, and it's a rising tide. This isn't a market where there's one winner. I think you want to pick the best customers. We don't lose customers when we win them; they stay with us. We haven't lost a single infrastructure company that we've won, but you do have to have patience and a sense of humour to sell to utilities, because they are naturally cautious. They're pretty heroic people, and they're risk averse. But we're now just getting this momentum where we've got brand recognition and I think an appreciation for how reliable our products and our team and our services.
This might be a stupid question or an ignorant question, but in terms of the tailwinds that are coming, how important is it, could you just stand still today and keep serving your existing clients, or how important is it to sell to the next customer, to penetrate further existing customers? Does it just sort of happen naturally, or how much effort sort of goes into that?
It's another good question. We've got, we're at an exit run rate of subscription revenue of about 20 million at the moment, and that grew close to 50% over the last year. And we think we're 20% penetrated in our current customer footprint. We've got about 425 enterprise subscription customers. So we should be able to, we're not going to get all of that penetration, but we should be able to quadruple it over time if we do well with account development. And the other important thing, though, is we want to be the most respected and dominant software player doing what we do. So we focus on new logo wins. We're winning about 2 customers a week.
Still pretty solid.
Yeah, and they start small, and naturally, but you've got to win them to be able to grow them. So that's a really key metric for us and for investors.
And you talk about key metrics, and I know on yesterday's call you said around NPS and the independent study there that typically you don't sort of publish those. You do them internally. Can you just talk through what it was and the significance in terms of satisfaction from customers, but what that leads to in terms of retention?
Yeah, and as context for those that aren't familiar with NPS, it's a Boston Consulting framework. It's been around forever, and you can score from -100 to +100, and generally speaking, 0 is considered good, and then it ratchets up. And the context was one of the very big private equity firms. They didn't ask us, didn't ask me. They went and surveyed 40 of our customers, and came and reported back the NPS score, which is in the 90s, which is
unheard of.
Yeah, it's very high. So we do track it internally ourselves, and it generally sits between 45 and 60. So it's testament not just to product and technology, but we have a pretty phenomenal team that delivers directly to customers. We've got solution engineers that go and help our customers be successful. So. Actually, one of our mantras is to be the partner that our customers cannot imagine living without, and that does start to have an impact when you put people and process alongside good product.
And when we look at guidance for this financial year, I know you talk about second half, EBITDA break even. How do we look at what are the key things for investors to look at? Obviously, that I think in the last quarter. You demonstrated strong growth without strong costs increasing. That'll probably change over time as we invest in more products and scale and the rest of it. But you're sort of talking about that positive jaws effect into the future. Is that the way we should look at it?
Yeah, there's a few things. Over the past 18 months, we've been approximately cash break even. And we've grown gross margin, so that's grown to 76% from, I think it was at 60, 67, 68 the prior year. So the gross margin profile's growing.
And that's with the more subscription revenue and transaction revenue, which is more
and
volatile
transaction
and lower
revenue,
margin.
Lower margin, it's a services business. So there is a revenue mix component there. We've managed to keep costs materially flat through the past year and a half.
Because I think it would have been 3 years ago where you really crunched down costs and brought them right down, but you managed to basically maintain that and grow really strongly through it, which is a testament to the product and management.
Yeah, and look, I think every technology business on the face of the earth, we're looking really hard at AI tools, not just putting them inside of products, but inside of our work practices. And we're training the whole business at the moment.
What does that look like specifically, without giving away any trade secrets? But is it running our emails? Is it more productivity sets? I'm just interested from a self-interest perspective, and I'm sure others are. But how do you talk about your Pole project? Increasing 20, 30, 40% productivity. What tools are you using in terms of internally?
Everything for product design, prototyping through to code development, and that's quite dramatic in terms of increased efficiency, and also looking at it's called agentic AI or agents, where the AI doesn't just do the initial processing and summarize. It actually makes a business decision, and can do that without human intervention. So we're looking at the choke points in our business. Everything from lead generation through to cash collection. And with a big customer experience element.
And in terms of from an agentic AI perspective, is that a set product, or you're building that sort of internally yourself?
It's a combination of using. There's some we want to be a great fast follower at this, and we're using a global training agency that probably the best group in the world, I think, and bring the whole company along. So it's exciting times. It's great time to be a smaller software development business.
And I think people have talked about agentic AI and AI over the past sort of 18 months. I think your firm, your business is such a size now that you haven't built up this excessive fat. Whereas, you look at overnight, as Amazon and all the different companies, cutting 30,000 jobs. That happens over many years, right? That you get bigger and bigger and you can, unfortunately, crunch it down for the personnel perspective, whereas you're still nimble, agile, scaling fast, that you can keep your team alongside it as well.
Yeah, it's interesting. We've got in Boulder, where we're based, there's Google and Facebook and Microsoft, etc. And the level of layoffs that are taking place is phenomenal. For us, it's about being able to go 50% faster.
Yeah, exactly.
Rather than
than have to cut costs and cut people.
Right.
And if we look in the next sort of 3 to 5 years, of a success story that Ike inevitably will be, what does it sort of look like? Is it? I suppose the way I'd ask it is, what excites you most? Is it winning logos, scaling revenue, ERR? Is it share price? What's the most satisfying thing for you?
Well, share price for our investors clearly is very important. But we want to own the market. If not own the market, but be the most respected player in the market in terms of power distribution and solving the specific problems. And we are aiming to build a platform so that we deal with each important workflow that our customers have pain around at the moment, and we want to stay very high growth and profitable.
We're very glad that you fended off the would-be acquirers in the last 12 months, and they're still sitting on the boards. Good to see the share price momentum picking up alongside the quarterly performance, and good luck for the rest of the year. Thanks very much for joining us, John.
Thanks, Simon.
Cheers.